Gotta say, Bitcoin is giving me more chills than any Halloween decorations tonight. It's back in the headlines near record highs again. And for athletes, well, it's sparking some serious FOMO.
Definitely. And with athletes, their careers are, shorter than most, so it's a unique situation.
Exactly. We're basing this deep dive on a recent post by Torben Buer, who really gets the business side of sports.
He asks the tough questions like, for athletes with that limited earning window, is jumping into Bitcoin a smart move or a risky
Right.
gamble?
Yeah, because we're talking about serious money here. Bitcoin is nearing that record high we saw back in March 2024, over $73,000. But this time around, something feels different.
You're right. This surge, it's driven by a few things. First, the demand for Bitcoin ETFs is through the roof. We're talking $68.6 billion has flowed into them just this month. And remember, the SEC, they were hesitant about these for a long time.
So now it's like everyone wants in on the action.
It seems that way. And there's this expectation that clearer regulations are coming, which makes those big institutional investors feel more comfortable. Then you factor in all the global uncertainty, inflation, even concerns about U.S. fiscal policy. Bitcoin starts looking like a safe haven to some.
It's almost like Bitcoin has grown up in the eyes of some investors.
Maybe. But for athletes, the key question is, does this rally actually benefit them, given their specific financial needs?
Right. Their earning window is so different compared to a typical career. So what is it about Bitcoin that's so appealing to athletes in the first place?
Well, that potential for fast, huge returns, it's a major draw. Traditional investments, they tend to grow slowly and steadily, but Bitcoin, it has a history of big swings, big wins, and big losses quickly. And that speed appeals to athletes who are looking to maximize their earnings in a shorter time frame.
Makes sense. They want to see those gains while they're still in the game?
Exactly. Plus, there's that element of control. A lot of athletes, they feel disconnected from traditional financial systems. They like the idea of having direct control over their wealth, separate from banks and institutions.
Like what we saw with Odell Beckham Jr., right? Back in 2021, he chose to take his Rams salary in Bitcoin.
Oh, and that was right before the market took a nosedive. His $750,000 salary, paid in Bitcoin, it lost over 50% of its value in just a few months. That's the harsh reality of how volatile Bitcoin can be.
Imagine losing half your paycheck that fast. It really highlights the stakes involved for athletes.
Absolutely. But even with those high-profile examples, crypto still has a strong pull. Trevor Lawrence, he partnered with Blockfolio and got a big chunk of his signing bonus in Bitcoin, Ethereum, and Solana.
So even knowing the risks, some see that potential upside as too good to pass up.
Yeah, it seems that way. But the question is this a calculated risk, or are they just giving in to FOMO, that fear of missing out?
Especially because some of these athletes might not have the financial know-how to navigate this complex world.
That's crucial. We need to look beyond just the excitement of Bitcoin and dig into those very real risks that come with it.
Okay, so we've talked about the allure of Bitcoin. Those potential gains are hard to ignore, especially for athletes. But as with anything this high stakes, there are risks, and some are pretty serious.
Yeah, absolutely. And for athletes, these risks are even bigger, right? They have a shorter time to earn, and they're dealing with huge amounts of money.
Let's unpack these red flags, starting with the one that's always on everyone's mind: volatility.
Bitcoin's price swings, they're famous or infamous. I mean, it's not unusual to see it jump or drop like 10%, even more, in a single day. It's a wild ride.
And for athletes who are counting on their investments for their future, well, a sudden drop could wipe out, a big chunk of their savings? It's not like they could just sign another contract to make that money back.
Exactly. Their earning potential is front-loaded, right? Those early investments are crucial. And then you have the whole regulatory landscape. It's still a work in progress. We have those Bitcoin ETFs now, but the rules for crypto overall are way less developed than for, say, stocks or bonds.
So it's like playing a game where the rules keep changing. Tough to plan your moves.
Exactly. All that uncertainty creates risk, especially for investors who are new to all this.
You mentioned ETFs earlier. Can you explain those a bit more and how they fit into the picture?
Sure. An ETF, an exchange-traded fund, it's basically a bundle of assets, right? You can buy or sell it on a stock exchange. And a Bitcoin ETF, it tracks the price of Bitcoin without you actually owning the cryptocurrency itself.
So it's like dipping your toes in the water without going for a full swim.
Yeah, a way to get exposure to Bitcoin without all the hassle of buying it and figuring out how to store it securely.
And that simplicity is appealing to some investors. But ETFs still carry the same risks as Bitcoin itself, don't they?
Absolutely. They're directly tied to the price of Bitcoin. So if Bitcoin goes down, well, the ETF goes down with it.
Simple as that.
And then there's another risk with ETFs, the possibility of mass sell-offs. If a bunch of investors decide to sell their ETF shares all at once, it can make a price drop even worse, like pouring gasoline on a fire.
So it's this domino effect. One sell-off leads to another, and things spiral downwards.
Right, and this is where we get to the whole issue of liquidity, which basically means how easily you can buy or sell an asset without messing with its price.
Okay, so how does liquidity come into play when we're talking about athletes in Bitcoin?
Well, with those big Bitcoin transactions, the kind of athletes with their contracts would be doing, it gets a bit more complex. We're talking about over-the-counter desks, OTC desks, that handle these big trades. It's not like buying stocks on a regular exchange.
So less public, more like a private club.
Yeah, more like a private marketplace. And the thing is, liquidity on these OTC desks can be limited, meaning there might not be enough buyers ready to snap up a big sell order without affecting the press.
So a bunch of big names, like athletes, all decide to cash out their Bitcoin at the same time. It's like a traffic jam. Things slow down, prices could drop even more.
That's the concern. And for athletes who might need that money quickly, for an investment opportunity or something unexpected, that lack of liquidity, it can be a real problem.
Like you need to get somewhere fast, but you're stuck in rush hour. Not ideal.
Not at all. So we've got volatility, uncertain regulations, and liquidity concerns. It's starting to make Bitcoin look more like a gamble than a solid investment, especially for athletes.
But what about the Bitcoin believers who are in it for the long haul? The HO dealers. Their strategy is to just ride out those price dips and wait for that big payoff, right?
Yeah, and historically, that's worked for some. Bitcoin has had those boom and bust cycles. If you held on through the rough times, you might have seen big returns. But that requires a certain level of, financial security. A rookie signing their first contract, they're in a very different position than a veteran who's got a diversified portfolio. And this is where having a good financial advisor is crucial. Someone who gets crypto, who can help them with taxes, build a diversified portfolio, be their coach in this whole financial game.
Someone who speaks both athlete and crypto, because those are two different languages.
Exactly. Someone who understands their goals and how much risk they're comfortable with. This is about building a secure future, not chasing quick wins.
So we've talked about the good, those potential Bitcoin gains, but also the bad, the risks, especially for athletes. Their careers are short, their earning window, it's like a tightrope walk.
It is. It's a balancing act. But even with high-risk stuff, it's not about avoiding it completely, right? It's about, being smart about how much you put in, how it fits into your overall plan. That's crucial for athletes.
Less about going for that one big play and more about like building a strong foundation.
Exactly. Diversification is key. It's like having a solid offense, A and D, a great defense. You don't put all your eggs in that Bitcoin basket. Real estate, index funds, those are your steady, reliable plays.
Those are the base, and crypto becomes an addition, not the whole game plan.
Right. Now, if an athlete does decide to go for Bitcoin, gotta think long term. We know Bitcoin has these ups and downs, booms and busts. Riding out those dips, that can lead to big gains, but only if you can handle the rough patches financially. A rookie signing their first contract, they're in a different position than a veteran who's got, a bunch of different investments.
It's like knowing when to go for it on fourth down versus being smart and punting.
Perfect analogy. And this is where a good financial advisor is so important. Someone who really understands crypto, someone who can help with taxes, build that diversified portfolio, basically be their coach in this crazy financial game.
Someone who speaks both athlete and crypto, because it's like two different worlds, right?
Yes. Someone who gets their goals, how much risk they're okay with. Remember, this is about the long game, securing their future, not just chasing headlines.
So diversify, think long-term, get expert advice. Any other must-haves for athletes navigating all of this?
Got to stay informed. The crypto world, it changes constantly. Regulations, new technologies, what's true today might be outdated tomorrow, like keeping up with rule changes in their sport, right?
Not paying attention, it leads to penalties.
No.
Or in this case, financial losses.
Exactly. And beyond Bitcoin, we have other things going on in the crypto space. Stable coins, for example. They're designed to be less volatile, usually pegged to something like the US dollar.
So a bit more predictable, like a safer option within crypto.
Potentially. And then you have all the altcoins. Tons of them, each with their own purpose and tech. But these are usually even more volatile than Bitcoin.
Higher risk, higher potential reward, definitely not for everyone.
Good way to put it. And the thing is, this whole crypto movement, it's making us rethink traditional finance, giving people more control over their money, but also making things more
Like
complex.
a whole new league is forming, and we're still figuring out the rules.
Exactly. For athletes, it's about that balance, using the potential of this new financial world while still protecting their earnings, building that secure future.
So, to sum it all up, Bitcoin, yeah, exciting, could be really lucrative, but risky. Athletes, they got to be strategic, not jump in without thinking.
Solid advice for everyone, really. Understand those risks, spread your investments around, get some expert help, and stay informed. That's how you navigate this whole ever-changing financial landscape.
Great advice. And listeners, if this sparked any thoughts or if you have your own crypto stories, hit us up on social media. Always love to hear your take.
And until next time, stay informed, stay smart, and remember the best plays, those are the ones that set you up for success in the long run.